If you're looking at Bitcoin's recent price drop and thinking it's a red flag, you could be missing the single most important market signal of the entire year.
You see, here's the twist. While the rest of the market was soaring on a wave of absolutely fantastic economic news, Bitcoin suddenly took a 3% nosedive. And the real reason why has nothing to do with fundamentals and everything to do with one single massive number.
By the end of this breakdown, you're going to understand exactly why $420 million was just ripped out of the market, what it actually signals about Bitcoin's underlying strength, and how it really clears the path for what's coming next.
Okay, let's dive right in. Now, to really get a handle on this paradox, we first have to look at all the reasons the market should have absolutely exploded to the upside. I mean, the setup for a massive price surge was, well, it was perfect.
It all kicked off with this data right here. The Fed's favorite inflation metric, the PCE index, came in cooler than anyone expected. Now, for risk assets like Bitcoin, this is a huge bullish signal. It basically screams to the market that the Fed's tough policies are finally working. And the market's reaction? It was instant. That cooler inflation number sent the odds of a Fed rate cut skyrocketing to 85%. You have to understand, lower interest rates are pure rocket fuel for assets like crypto. It makes holding cash way less attractive. And just as you'd expect, traditional markets like the S&P 500 started rallying hard on this news.
But it wasn't just the macro data. On the exact same day, we got this tidal wave of amazing adoption news. The CFTC gave the green light for spot Bitcoin on registered exchanges, which solves a massive headache for institutions. Then you had Indiana moving to let pension funds buy in. And to top it all off, the CEO of the world's biggest asset manager made an absolutely blockbuster statement.
And this is where things get really wild. Larry Fink didn't just say Bitcoin was a good long-term asset. No, he dropped a bombshell. He revealed that entire nations, sovereign wealth funds, have been actively buying Bitcoin around these prices. I mean, talk about a massive vote of confidence from the biggest players on the planet.
So, here's the billion-dollar question, right? We have this perfect storm of bullish macro data, insane institutional adoption news, and yet the price falls off a cliff, dropping from over 91,000 down to nearly 88,000. It makes no sense. So let's solve this mystery.
Okay, let's switch gears and look at the technicals, because this is where the story unfolds. The real answer for that crash wasn't in the headlines. It was hidden deep inside the market's own internal structure.
What we saw was something called a leverage flush. Now, this is a purely technical event, not a fundamental one. Think of it like a deliberate market spring cleaning. It's a very fast, very aggressive price move designed specifically to wipe out traders who are using way too much borrowed money or leverage to bet on the price going up.
And here are the cold, hard numbers behind that mystery figure from the beginning. A mind-boggling $420 million in leveraged long positions got completely vaporized in just 24 hours. And get this, the most brutal part was a single one-hour window where $154 million was liquidated, which forced the price down in a violent chain reaction.
This was a textbook sell the news trap. The big players, the market makers, they likely used that flood of good news as the perfect cover. They knew tons of retail traders would pile in with leverage, feeling euphoric. So they pushed the price down just enough to trigger those first liquidations, which then cascaded and wiped the slate clean. This wasn't a sign of weakness. It was a short-term, calculated, manipulative market reset.
You know, understanding these hidden market mechanics is absolutely critical in crypto. So if you're finding this kind of breakdown valuable, do us a favor and help support Crypto Global News by hitting that like and subscribe button. It lets us keep bringing you these essential insights.
And seriously, don't forget to hit that little bell icon. In a market that moves this fast, getting updates in real time isn't just nice to have, it's the only way to stay ahead of the game.
All right, so now that all the over-leveraged traders have been flushed out of the system, what does this actually mean for Bitcoin moving forward? Was this a major red flag, or was it actually a healthy reset?
Well, when you zoom out and look at the bigger picture, the market structure is still incredibly healthy. That beautiful long-term bullish trend of creating higher highs and higher lows, it is perfectly intact. This drop was just short-term noise, not a change in the overall trend. And that key resistance level we've all been watching at $94,000, still the one to beat.
And that 94K level is so important because of what's lurking just above it. We're talking about an estimated $2 billion in short positions just waiting to get liquidated if the price can punch through. Think about it.
They just cleared out all the leveraged longs on the way down, which perfectly sets the stage for a massive short squeeze on the way back up.
And let's not forget the big macro picture that started this whole story, because it's only getting more bullish from here. As the Fed actually starts cutting interest rates, the return you get on your plain old savings account is going to drop. That capital, trillions of dollars, has to go somewhere to find a better return. And in the coming months, a lot of it is going to start flowing into risk-on assets, just like Bitcoin.
So let's put it all together. The short-term price action was a brutal, manipulative flush, yes, but it served a critical purpose. It completely reset the market and actually confirmed the underlying strength of the long-term trend. The bullish fundamentals are stronger than ever, and the macro tailwinds are just starting to pick up. The weak hands are gone. So the real question is, what's your next move?
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.